We've got Sumit Ritolia, the lead analyst, modeling refinery and oil markets at Kepler, joining in on the show right now. Sumit, great to have you on the show. Thank you so much for your time today. If just wanted to, analyze whether those 100+ levels are now foregone for oil, do you sense that there is a chance we could actually rebound to those levels once again?
Hey, hi, good morning. Thanks for the opportunity. Actually, I think we are in for a nice ride, if you ask me and personally. And like oil market from last few weeks has have been factoring some kind of deal. But what we have seen over the weekend with firing at different ships, I think India's two ships also was hit, along with some container ships of French and UK nationals. So and today morning we got to know that US has boarded a Iranian dry bulk ship. So we are in for a good ride this week if there is no movement towards peace talks. So market has been factoring some kind of deal. So that's why you have seen that oil was pushed back from hundreds to two digit. But if things doesn't improve in terms of peace talk, because we are factoring in now fundamentals like 12 to 13 million barrels a day of crude is not flowing from Middle East. Productions are certain. Yeah, so crude price will be able to take its north journey.
Sumit, so therefore, what are the alternatives? You clearly highlighted 13 million barrels a day not making it to markets. And over the last maybe a month and a half, 40, 45 days, it's been around $50 billion worth of oil which has not hit markets, right? Broadly at $100 a barrel. What does this essentially do in terms of reopening certain refineries which may be shut? Does it potentially give an opportunity to others to kind of try and push supply out?
I think that's a good point. If you look at U.S. exports this month, I think it's all-time high, and they might clock at around, if I'm not wrong, 5 to around 5.5 million barrels per day. But what we need to understand, it's not like plug in and plug out. You cannot increase your production dramatically. So if whatever we have seen, like we have seen some portion Western Africa, particularly Nigeria, some portion US, but that's very marginal in terms of how much the production we have lost. So and the question you have asked, like what is next? Next will be like for India's perspective, I don't think there is an issue with respect of crude oil. India's crude oil predictive, like what we see total April coming is more in line with what we have seen in March. And also you need to factor in like in April we have a one refinery, that is Naira Energy down. So India's in terms of crude oil is well secured, but overall globally, I think till now we had like refiners had cushion of their commercial stocks, even like in Korea, Thailand, Japan, they have SPRs, even in many European countries. But as we go on, I think the demand side has to get factored, and we will be seeing massive run cuts. Though we have seen in particularly in Asia, and if the situation doesn't improve, we might see more run cuts. Run cuts, I mean refinery operations to go down.
Hmm. If you can also give us a sense of, the kind of crude which is now stuck in the entire Strait of Hormuz, and is there a visibility that crude may, come into the market, and when it comes into the market, will there be an impact on the pricing?
I think it's a good question, but again, like even if it's come, it will not be like in a hush. Like it will take time. Like what we have seen, like in the when the first round of peace talks was happening, there was some noise around that. There will be around 10 to 15 ships, 10 to 15 cargoes of different commodities will be allowed to pass. So, and if you look at how much cargoes used to pass, it was about 100. If you'd ask me what was in 27th of February, 27th was total number 132 vessels that passed. So even if the situations improve, it will take 2 to 3 months to fully get in the picture, like get in the picture of pre-war and prices like price as you asked in the starting of the session, like prices are not going to dramatically come down. We are in for a good ride in terms of oil for the rest of the year.
Okay, so Sumit, sorry, I want to try and push you a little bit more on that. So say if the war were to, or there could be a resolution to this war, say by late this week, How quickly do oil markets go back to normal? How quickly do oil prices come down? And by how much? What's the scope looking like?
So yeah, we have factored in, like, as of now, our base case assumes like war getting ended between April to May, and the scenario going back to pre-war, it will be lasting till October. There are many factors. One is logistic nightmare, and second is like many big producers in the region, like Saudi Arabia, Iraq, Kuwait, Qatar, all have cut front. Like Iraq, they have cut their upstream production, and it's not easy. I will say, like, it will take them time because thousands of thousands of wells are shut. So once this improves, first thing will be the producers will be looking at how the logistics is improving. It's easy to say, like, even in Saturday, Iran Strait of Hormuz was open, but it was shut within an hour. So upstream vessels, container owner, they will factor in some kind of what you say in terms of fear, or what I say volatility, before increasing their production, before increasing ships movement. And also we see around 3 to 4 months of proper normalization time. Even if it's day one, like if Strait of Hormuz opens today, we will see normalization going back to August, September, even October.
Also the other point, Sumit, everyone's wondering is what happens when the Iranian barrels sort of go off the table? What opportunities, including India, do Asian buyers have then?
I think in terms of India's perspective, Iranian barrels are off the table now. I think we are on the 20th of April, and sanctioned period was only till 19th April. And we have seen around only two vessels that have got discharged yet. Only one at the IOCL Paradip refinery, and one at Jamnagar Sikka's Reliance refinery. And in terms of overall issue with respect to how the Asian barrels will react, see, as of now, it is important to note that Iran has around, if I'm not wrong, around 130 to 150 million barrels of crude ex-Persian Gulf. So in terms of its major buyer, that is China, I think China buys almost all the Iranian crude oil. So they are secured till 1 2 months. For them, they don't have any issue. But yeah, for Iranians, if they're not able to ship their volumes, they have to cut production, as I was speaking. What has happened with Kuwait, Saudi Arabia, Iraq, that might hit them hard. So yeah.
Mm. The other thing then is, and just taking a leaf from what you reiterated right now, and also the fact that Russian barrels are clearly what are sort of staying central to the theme, but getting harder to handle definitely. What is your forward view on oil? Next 6 to 12 months, what is the best and the worst case for oil?
I think it's anyone's guess, to be honest. But I think the best case is, like, we have to be hopeful, and we see, again, as I was speaking, even if the resolution happens today, it will take around 3 to 4 months for everything to normalize. So if you factor the worst case, we are in. Then you don't have. Then it's anyone's guess. Like, we are in for a quite bullish oil this year.
While the US has relaxed some norms for the oil which is floating, whether it's from Russia or from Iran, to be bought by countries, do you have any idea of how much of oil that oil would have been procured by many of the countries?
I think I think Iran oil is out of the table again. I will reiterate that because we are on at the 20th of April, and it was till 19th. Only the countries apart from China, like, again, China's independent refinery doesn't bide with the compliance and all. So apart from that, I don't think any other nation will be trying to look at Iranian barrels. But and we got a waiver, like, I think refiners or countries got a waiver for second waiver in terms of buying Russian oil. So as I see the data as of now, overall 99 million barrels of Russian barrels are floating around the globe, and at the start of the war, it was around 170 to 150 million barrels. So countries, predominantly India, and we have seen some volumes flowing to East Asia also, like Brunei, Philippines, and all that. They have lapped in Russian barrels. If I can quote a number to that. Like India just imported around 1.1 million barrels per day in February. March was roughly around 2 million barrels per day out of our total 4.4 million barrels imported. So Russian crude was a major backbone of the India's crude diet. And same is happening in April. And like if I go back like 15th, we were seeing around overall 1.2, 1.3 million barrels of India's Russian crude import. But since the second wave has came and we have seen an uptick in overall arrival in April only, like we are seeing now 1.6 million barrels per day of arrival. So there is increment of 2 to 300 kbd. Like, and as we go on, I think April overall India's April import will be resilient, but it is also important to factor in that others East Asian countries like though India is affected by, but East Asian countries are more affected than India because they don't have much access to Russian oil. So we see some East Asian countries also trying to get a deal with Russians so that they can also try start importing Russian energy. So Russian oil is though a backbone as of now, but for May and all, we need to see how it flows. And also there have been a rampant attack on Russian energy infrastructure from last 2 to 3 weeks, and we are showing low loading that might not impact as of now, but it will impact in May to second part of.
Can you also give us a sense of the gas cargoes as well? Means how much of that gas cargoes we were able to get, India was able to get, and which has been, because of the Qatar issue now, where is India getting most of the gas cargoes from?
I think again I don't have a number in top of my mind, but for LPG and LNG, I think LPG situation is more or less similar what we had in March. From Middle East, it's almost dried up, apart from some cargoes from Oman and all. But we have Indian refiners or OMCs have increased their purchases from US, Nigeria, Argentina, Australia. But again, we need to factor in a league and lag time. Like why Middle Eastern cargoes why Middle Eastern import supply chain were favored because it was around 7 to 8 days, but from these Atlantic countries, it takes around 35 to 45 days. And also you have to factor in a lot of freight. So yeah, gas situation is bit on one of the biggest variable for Indian OMC.
Okay, Sumit, great to have you today on the show. Thank you so much for your time.
Yeah, thank you.